everyone, and welcome to another episode of Axe Finance LendTech TV, the podcast where we explore the forces shaping the future of lending. Islamic finance is reshaping the financial landscape across Southeast Asia, and with it, reshaping how banks approach operations, compliance, and delivery. Today on LendTech TV, we're not just talking about growth trends. We're diving into the real operational and digital transformation challenges that come with building successful Islamic finance offerings. Let's get started. I'm John, and joining me today is Joe Udomdejwatana, Business Development Director for the APAC region of Axe Finance. Joe, it's a pleasure to have you here.
Hi, John, and the listeners on this podcast. Thanks for having me, and it's great to be here.
Joe, there's been a growing talk about Islamic finance reaching a tipping point in Southeast Asia. Could you give us a quick overview of what's happening across the region?
Of course, Islamic finance is accelerating across Southeast Asia in a very real way. In Indonesia, Islamic finance assets surpassed 152 billion USD, growing 13% year on year. In Philippines, 78% of the population is now open to using Shariah-compliant financial services. And in Malaysia, Islamic financing now represents 43% of total banking system loans, enforcing its leadership position globally. But with this growth comes added complexity, particularly around Islamic finance operations. Regulatory changes, compliance demands, and the need for stronger digital frameworks are now front and center for banks.
Let's dive deeper, starting with Indonesia. What's the landscape looking like for Islamic finance there?
Indonesia's regulators, particularly OJK, have really raised the bar. In early 2024, new regulations mandate stronger Sharia governance, including dedicated compliance units, independent contract validation, and enhanced Sharia supervisory board oversight. For Indonesian banks offering Islamic finance services, the key challenges are high compliance demands requiring major system upgrades, diverse Sharia interpretation creating legal uncertainties, and operational resource strain, especially for banks managing both conventional and Islamic portfolios.
And in the Philippines?
The Philippines is still laying the foundation. BSP, the Central Bank of Philippines, is now allowing conventional banks to launch Islamic banking units, with a strong focus on expanding access to Sharia-compliant financing, especially in underserved regions like the Mindanao. However, banks there face hurdles such as institutional knowledge gaps in structuring Islamic finance products, system limitation as many platforms struggles to support Sharia-based financing models like Mudarabah and Ijara, and legal ambiguities around contract enforceability that could slow broader Islamic finance adoption.
And Malaysia, a more mature market but still pushing reforms.
Exactly, John. Malaysia continues to lead globally, but it's not standing still. Recent regulations are pushing banks to fully segregate their Islamic and conventional operations, tighten Sharia governance, and enhance risk management for structures like SBBA and collateralized commodity murabahah. It's strengthening integrity across Islamic finance operations, but it also raised the bar on compliance and operational excellence.
Clearly, banks have a lot to adapt to, especially in managing their Islamic finance portfolios. How important is digitalization in helping them meet these challenges?
Digitalization is absolutely critical, John. Modern Islamic finance demands agility, compliance assurance, and operational efficiency. That's where leading focused digital technology platforms come in. At Axe Finance, our solutions are designed to streamline the end-to-end aspect of Islamic finance operations, embedding compliance and Sharia governance throughout. Specifically, platforms like Axe Credit Portal for Islamic banking enable banks to rapidly build Sharia-compliant financing products with zero coding, ensure end-to-end governance workflows through every transaction, automate compliance checks to eliminate riba and gara risk, and monitor Islamic finance portfolios with AI-driven early warning systems. In addition, we manage both Islamic windows and fully Sharia-compliant operations on a single platform, while maintaining full regulatory segregation. In Indonesia, for example, banks are under pressure to embed Sharia principles across every stage of the lending process. To meet this, lenders need zero-code Sharia product builders to quickly design offerings without long development cycles. Axe Credit Portal, or ACP, enabled this, ensuring full compliance with OJK's governance requirements.
Impressive. And you mentioned a major success story earlier, Al Rajhi Bank.
Yes, one of our long-term partner. Al-Rajhi Bank, one of the largest Islamic banks globally, selected Axe Finance to transform their Islamic finance operation across corporate, SME, and institutional segments. Through digitalization, they accelerated origination, improved risk management, and enhanced Sharia compliance, demonstrating how technology can drive real operational excellence.
Fantastic. Joe, any final thoughts for banks tuning in today?
My final thought would be this. Islamic finance in Southeast Asia is no longer an emerging opportunity. It's a business reality. Banks that invest now in modern, compliant, finance-specific infrastructure will be the ones leading this transformation over the next decade in this fastest-growing region.
Joe, thank you so much for joining us and sharing these insights. And to our listeners, if you want to learn more about how Axe Finance is enabling digital transformation across Islamic finance in Southeast Asia, visit axefinance.com and check out our full article, Islamic Finance in Southeast Asia, a Strategic Inflection Point, Case Studies from Indonesia, the Philippines, and Malaysia. Thanks for tuning in, and we'll see you next time on Axe Finance LendTech TV.